Yeah, so it's interesting with buyers right now. It's a very interesting time. Inventory is up, but pricing is down. However, buyers really shouldn't make any assumptions that the housing is more affordable, and that just sounds so contradictory. You say, Neil, like, how is that? The prices are down. They're going to be spending less, but don't forget, interest rates are higher, and it impacted stress test. So I saw a comparison between two homes, several $1,000s apart. One looks like a good deal, but with the higher interest rates, the payments were higher on, let's say, like a $750,000 home versus a $900,000 home with a lower interest rate. So be careful about that. You know, you don't want to just go write these contracts without conditions. Go back to your lender, and the lender says, you know, you went on the premise that the house cost less, but you don't qualify for this. So don't be surprised. You end up in a jackpot. And I'll add to that. That has happened. So that's not anecdotal. It's not just a story that's been made up. I mean, guys are going back to their lenders and finding out they don't qualify, and it's a painful decision because where do you come up with the cash shortfall, right? You can only be approved for how much the bank is willing to lend you. And if let's say you settled your down payment, you know the rate, you know your payment, but you have a shortfall, not so easy to just come up with that cash. It's not like you can access other lines of credit and that kind of thing, because that impacts your debt ratios. So does that mean bank of mom and dad? You know, not everybody's fortunate to be in that situation. So that's why I say at times like this, when in an environment when the interest rates are moving, go back. That pre-approval, I'm not saying it doesn't mean anything, but it needs an adjustment, it needs an update.